It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, June 13th, 2016. Got some incredible opportunities going into this third week of the month of June. Crude and S&P are range-bound, while the gold and euro are quite the bullish markets going into Tuesday's trading session. Before we jump into charts and take a look at some strategies for tomorrow, I do want to remind you the only place to find the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link. Come join me for the full-length version on the blog at Sideways Markets. While you're here, don't forget, grab a free pass, upper left-hand corner. If you're not a member here at School of Trade yet and you'd like to grab a free pass, come join me in the trade room as a guest for a couple days this week or next. There's your chance to grab your free pass in the upper left-hand corner. Don't forget to register for the mailing list. Lower left-hand corner, name, email address, check your inbox. I'm going to send you a verification email. I want to make sure you get an email from me every evening just before I send out that nightly newsletter. Join the newsletter on the left-hand side of the screen. The other right, left-hand side. Right below the video tonight, you'll see a spot to download all the charts for tonight's video. All the charts you see me using in tonight's video can be downloaded on that link below the video. And then over on the right-hand side, I'll encourage you to learn more about what it means to be a student here at School of Trade by taking our free trial membership. I'll talk more about this at the end of the video, but you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. I can guarantee you that, and I'm always standing by 24/7, 365 to answer all your questions. Hope you guys had a great weekend out there. Feels good to be back here at the desk for a Monday evening version of our nightly newsletter. We got a big week ahead of us. We got quad witching towards the end of the week. FOMC starts tomorrow. We'll probably see some rollover impact later on in the week. We'll talk about that more and more as we go. First things first, so this is going to be the third Friday of the 6th month of the year. That means Friday is quadruple witching. That'll really start playing into Thursday and Friday's session. We'll talk more about that as we get a little bit later on in the week, so tune in for more there. We also have the Federal Open Market Committee meeting beginning tomorrow. Not to worry about it tomorrow, but we'll definitely be talking about it in tomorrow night's newsletter because, of course, scroll down a little bit. We're going to have there you go, 2 p.m. Eastern Time announcement. That's coming late in the day or late in the afternoon on Wednesday. So FOMC meeting begins tomorrow. Announcement late in the day on Wednesday. Again, we shouldn't have too much of an impact on that tomorrow, but just so you guys have a heads up though, Wednesday afternoon is going to be the announcement. Friday morning is quadruple witching. We'll start looking at that on Thursday this week, and we'll talk more about that as we go. Looking forward to, we do have a rollover day on Friday for crude oil. We just rolled over on on the S&P, on all the E-minis. Rolled over on currency futures as well. No rollover in sight for gold until a few months from now, but we got rollover done. Again, rollover for crude oil this Friday. We got rollover that should have already been accomplished. We'll be trading the 9/16 contract on the S&P, all the E-minis, and of course the euro and all the currency futures. So get that stuff out of the way here this week. Now, how's tomorrow's schedule looking? First of all, nothing on the calendar for tonight, my friends down under or in Asia. We'll look forward to hearing from Italy, Great Britain, and of course, the EU at 5 a.m. tomorrow. If you trade in the London session tomorrow, right, London opens up at 3 a.m., goes until about 6 a.m., and we have a small break, and then the U.S. session will kick off after 7 a.m. Eastern time, of course, tomorrow morning. Don't forget, if you trade in the London session, you got 4 o'clock, 4:30, and 5 o'clock. The big news tomorrow, though, will be the industrial production out of EU. You know, we're looking at that 23rd. The 23rd is the date for the Brexit vote. What do you think is going to happen on that Brexit vote? Are you locally there? I got a couple friends in the area. What do you think? Are you locally there? I'd love to hear from you. My email address is jj@schooloftrade.com. Love to hear what your opinion is on the Brexit vote. 23rd of the month is when they're scheduled to vote whether to stay in the EU, right? Our good friends there in Great Britain. We'll see how that goes. Obviously, we will not be worried about that until then. And of course, you can see here going into the U.S. session tomorrow. If you be with us tomorrow morning in the trade room, we open up at 8 o'clock Eastern Time. We have the retail sales at 8:30, business inventories at 10 a.m. The big number for tomorrow, though, is going to be that retail sales number, 8:30 a.m. I'll tell you right now, Yellen and the Fed, my gal, Yellen, she's really hoping for a good retail sales number. Manufacturing's been hit or miss. Housing's been a little bit sluggish lately. They're looking for an excuse to raise rates one more time before this year gets too late. We saw that nasty jobs report, though, a few weeks ago. We shall see. You know where the plan is for tomorrow, though, is. Heads up on that news tomorrow morning, though, 4 o'clock to 5 o'clock. Getting the big number at 5 a.m. tomorrow for all the European-based traders out there. Retail sales are the big headline number tomorrow morning, 8:30 a.m., just after we open up the doors in our trade room. All right? That's the schedule for tomorrow. Remember, news is noise. Trade around that news, boys and girls. Don't be trying to gamble away all your hard-earned capital, trying to chase after movement happening on the news. We'll do it all together with our students tomorrow morning live in real time. How about some crude? Crude, we'll go S&P, gold, and then we'll wrap it up with the euro. Crude and S&P are looking pretty range-bound. Gold and euro looking pretty bullish this evening. Crude is range-bound with a slight bullish tone this evening as price finished the session back inside the original range that began today's session. And a possible low of a major bull channel tells the bulls to look for seller failures below the range and breakout pullbacks above the resistance trend line overhead. Couple key components in this chart right now. Definitely giving a little bit of a nudge to the buyers right now, but we need to see the proper trigger right now. You can see they recently trapped low after a beautiful trap high, by the way. They recently trapped low, but that's a tough candle to buy right there, right? Buyers are not going to want to buy that candle. They're going to want to buy a green candle, and so maybe if the next candle is green, right, then they'll look for those failures and then back up. I'm going to talk about that in a moment, though. But you can definitely see, though, here we are right in prime trap low territory right now. Just kind of a junk candlestick, though. We'll see how the open of Asia looks here in just a few moments. First of all, the day started off in a trading range. Some of the technical clues that we see in the chart today. The day started off, as you can see here, inside of a trading range, a very narrow range. If you recall from this morning's session, they went 2 deviations down, right? 200% down. We're going to talk about that more on the S&P here. So this is kind of important here right now. It's a little bit irrelevant for right now. We went 2 range expansions down, 2 range expansions up. You know, it's very, very rare that a market doesn't find itself back inside the range that it started the day from. And that's exactly where we are right now. We talked about that, right? We talked about that this morning when the day starts off inside of range, you got to make that your number one priority and keep fading that market back inside that trading range. We're going to talk more about that on the S&P in a moment because I think the S&P gives us a little bit better illustration of that range. This is, if you didn't watch this chart, obviously if you're looking at this just on a 5,000 volume chart right now, it's difficult to see that's a range. If you look at it on a 1,000 volume or an 800 tick or, 1 minute, 2 minute, 3 minute chart, you saw that range early this session, right? And then, of course, seller failure back in and then pendulum swing all the way back up. Overblew that pendulum swing by a little bit and then eventually came right back then in. Now, I want you to think for a moment, if this was a daily candle, I'm not going to waste your time with the daily chart right now, but I want you to think about this for a moment, though. Where did we open up? We opened up right here. Where we close? We close right here. So imagine for a moment this was a daily candle, right? It's a 40-minute candle. What would it look like? It would look like this. This is what the daily chart candle would look like right now. What is that? That's a doji. Does that give you much confidence as far as what direction? Well, they did close lower than they opened, so I guess it's a little bit bearish, but remember, a doji is a doji, a trading range is a range. A doji is just a 1 candle trading range. So what do we always do with trading ranges? We fade the breakouts. As the price goes lower, we look for buying opportunities low. As the price goes higher, what do we do in a range? We look for selling opportunities high. So when I look at this chart, there's a lot of candlesticks up and down, but in all reality, all it really is just one big doji. right? That's all it really is. So what I'm going with this here is as this price goes lower, buyers will be looking to buy it back up. As the price goes higher, sellers will be looking to sell it back down. Now, with that said, there is a very, very slight bull bias to this right now. It's very difficult to look at this move higher. You know, what do we always say about big, strong moves? Big, strong moves usually have an attempt to go back to the high, right? So we expect to see buyers trying. That's the key word here, trying. I think a lot of this is going to have to do with what happens the next few hours once we see the market open up, stretch its legs a little bit in Asia, and kind of see which way this thing goes right now. But we definitely have to give it a slight bullish tone right now, just because, look left, look at that extreme strength, right, on the way back up. So we know we should be seeing, we get the two-legged correction and then back up, right, to retest that high. Right now, the buyers are going to be gunning for that high. But remember, it's just one big doji, right? One big doji. So what should happen at the highs? We should see sellers into the market and try to bring it back down again. Now, that also takes me, what if price goes lower? Remember the doji example again, right? And again, we talk all about dojis. We go into tremendous detail about candlesticks in our intermediate course, right? The beginner course lays the foundation, gives you some industry knowledge. Intermediate course, technical skills, and then advanced course, wrap it all together with setups and triggers and trade management and journaling and all that good stuff. So we talk about this stuff in the intermediate course. Dojis are one candle trading ranges. As the price goes lower, buyers are going to be buying it right back up. So looking where we are right now, we're also sitting at the low of a long-term, this is what you call a pending bull channel, right? A pending bull channel. You know, you need to have 4 pieces to really nail down a channel. Right now we have 1, we have 2, and we have 3. This would be a pending bull channel. A first channel test, right, if you're a part of the school of trade community right now. So this is definitely a reliable buying opportunity at the lows. The problem, though, is, again, the day started off inside of a range. And whenever we start off inside of a range, we want to give that range the benefit of the doubt. You can see the low of that range is just right there, right? It's just a little bit below that trap low. And the fact that that candle didn't close green tells me when we open back up, we're definitely likely to see this price try to go lower. Sellers are looking for, right? Sellers looking to continue that move lower, and buyers will be looking for price to fail going back higher. What else do we have to worry about here? We have that resistance trend line. If you connect these two highs up here and draw that trend line down, you really can't draw it any other way. You can't draw it like that. Maybe you can, now that I think about it. No, that's not going to work. That's not going to work. That green candle up there spoils the fun for everybody up there. So that's probably not going to be the most reliable trend line in the world. As you can see, this now becomes a possible triangle. Connect the dots there, connect the dots here, and that's a triangle. What is a triangle? A triangle is nothing more than a trading range. In this case, the triangle is a little bit wide. What do we do at the low of a triangle? We look for a seller failure at the low to buy low. What do we look for at the top of the triangle? We look for a breakout pullback. Because of the overall bullishness of that triangle, we look for a breakout pullback to the tip of that triangle, right? The vertex of that triangle. So right now, we know we have that triangle channel trading range. It tells me as this price goes lower, sellers are going to be looking to continue that move lower, right? If they're successful, their target will be at the low, and buyers will be looking for buying opportunities off that low. As this price goes lower, buyers are looking for seller failure. Buyers are looking for seller failure as this price goes back lower. As the price goes higher, buyers are quickly going to be looking for some sort of proof that they can sink their teeth into this, because that red candle certainly did not give them much proof. We know, of course, though, that a green candle would get buyers interested here. The problem, though, is we don't want to buy too close to that overhead resistance. So as this price goes higher, buyers will be jumping on this, going up to that overhead resistance. Be careful at the overhead resistance, though, because there's a very strong tendency for these markets to want to pull back into the point of that triangle before they really make their liftoff. Buyers will be looking